Hi, folks. Ryan Honeyman here from Lift Economy. Many folks have come to us over the last 10 years and asked, how do I get more involved in creating an economy that works for the benefit of all life? They also ask, what skills and experiences do I need to help make this transition? So 3 years ago, we created something called the Next Economy MBA to help address this and similar questions. Lift Economy's Next Economy MBA is an online course that's designed for entrepreneurs, aspiring entrepreneurs, students, recent graduates, employees, and folks who want to learn more about transformational next economy strategies and businesses. Join the growing alumni network of nearly 250 alumni who've gone through this program and learned essential skills and hopefully built lifelong relationships for catalyzing businesses in the emergent and regenerative economy. So we encourage you to check out our course. You can go to lifteconomy.com/MBA. The next course, Cohort 7, starts on September 21st, 2021. So once again, go to www.lifteconomy.com/MBA. And now, on with the show. Welcome to Next Economy Now. The goal of this podcast series is to highlight the leaders who are taking a regenerative, bioregional, equitable, democratic, racially just, and whole systems approach to creating the new economy. Marjorie, welcome to the show.
Thanks for having me, Ryan.
Let's start at the beginning. Where were you born and raised?
I was born in Columbia, Missouri. It's a little college town right in the heart of the Midwest, and that's where I grew up.
Great, swing state.
Yeah, that's right. I grew up in a big family, 8 kids. Yes, we were Catholic. And my father had a small business. My grandfather, before him, had a small business. Most of my uncles did. So I grew up in a business family, and it was very natural to me to start my own business, which I did in my 30s. I started Business Ethics Magazine, did that for about 20 years, and met some fabulous people. I grew up with the whole socially responsible business crowd, Ben and Jerry's, and that crowd. And I became discouraged over time, Ryan, as I saw one by one these companies all be sold to multinationals or go public themselves and see their social mission squeezed out. So that pushed me to move into the new economy space. Say, we really need to build a new economy from the ground up. And that's what I'm doing now at the Democracy Collaborative.
Yeah, and when did you first get interested in how business could be a force for good? It sounds like around that time when you started the Business Ethics Magazine.
I have a master's in journalism, and I was working as an associate publisher at a publishing house, and I was helping to create new publications in management. And I was reading widely in the management literature at that time, always looking for trends, and I started seeing things like, South African divestment happening in the social investment community and making a real difference in putting pressure on apartheid. And I saw people talking about, open book management, where employees are taught financial literacy and employee ownership and corporate social responsibility. And I thought, I never heard anybody talk about business that way. I want to start a publication to help other people know about this and kind of be an information source right at the heart of it. And this is before the internet. So that's what led me to start Business Ethics Magazine. I saw this was a trend starting to happen. I wanted to lean my weight into it. I thought if we could really help business to be a force for change, that's a lever that could move the world.
Are you familiar with the book Reinventing Organizations by Laloux?
I'm not, no.
Okay. He did a study on what he called teal organizations, or organizations that are self-managed and don't have a hierarchy, in addition to things like they have a higher purpose than just profits. One of the things he was looking at was whether ownership is a main issue or it's more the lack of control that employees feel like in larger hierarchical corporations. But in your opinion, do you think freedom is not sufficient? Like there actually has to be employee ownership in order to really shift the economy?
Well, right. See, and this is something that I look at in detail in Owning Our Future. No one design element by itself will carry the entire day. with the design of a company. In the same way that a constitution in a democracy has more than one element. You don't just have a president, with term limits on the president. You have separation of powers. You have Congress, the Supreme Court, and the executive branch. You have a Bill of Rights. You have, term limits. I mean, you have, trial by jury and innocent until proven guilty. I mean, there's a lot of things going on in the Constitution that work together. So what's going on inside a company? What are the pieces that work together? And in Owning Our Future, I look at 5 of those pieces. Ownership is one, but ownership, as you are alluding here, is really a bundle of twigs. This is something that every first year law student is taught, that ownership is not one thing. It's a series of rights, and you can separate out those rights. I mean, it's with a house, there's a right to occupancy. There's a right to claim the growing value. There's a right to, control access and various things. So with a corporation or with a company, ownership is one, and that I call it membership. Who gets to decide, who's considered part of this organization? That's the membership aspect. And there's also governance. Who elects the board? Who has a right to govern this thing, and toward what end? So there's governance, and then there's purpose. You have to really look at purpose. I mean, is this thing designed for maximum profits in the short run, or is it designed as equal exchanges to create good lives for their suppliers, who are coffee growers in developing countries? That's their mission. John Lewis Partnership, the mission is the happiness of employees. So purpose, membership, governance. There's also finance. How do you get capital into these things? Does capital, because it comes in, does it get to control the whole thing? Or is capital a servant rather than a master? Is it a friend? As it is with impact investing. And finally, the 5th element I would point to is networks. I don't think enterprises don't stand alone. They are part of communities like cooperatives. There's a worldwide community of cooperatives, and that helps keep the structural integrity of the cooperative form in place and functioning over time. There's, B corporations. That's another community. That's a network that helps create a certain kind of company. So, yeah, so those 5 design elements, I think, are what makes a company what it is.
Yeah. And do you see a difference in your work between, say, worker-owned cooperatives or ESOPs in terms of the ownership? And is any ownership good, or do you see cooperatives as being, slightly not better, but just allow more voice within the company?
Yeah, I think of worker co-ops as kind of the bullseye. It's the tiny circle at the center of the target. It is the most democratic form, and I think it's one person, one vote. So that's a rather remarkable design principle to have inside a company, and I think it's a very good principle. So worker cooperatives, yes, I'm a huge fan, and I think that they're in a way kind of an ideal. It's also true that they work mostly at a small level. There are Cooperative Home Care Associates is the largest worker co-op. It has about 2,000 employees. It's in the Bronx. And it hires mostly Latina women as home care workers. So it's a very successful model and quite large. But by and large, most worker co-ops are smaller. And the ESOP form, I think, is actually a large community of companies. And there are some really exciting models within it. For example, I'm learning about ESOPs that also have B Corp bylaws. So now you're starting to see membership. The employees are members of the firm. They're not just hired by it. They're members of the firm. And the purpose is to serve a variety of stakeholders. And so now you're getting 2 design elements going. You have purpose and membership. Both are being inclusive. So I think that's a better model. And that's what you're seeing inside the worker co-op too. There's governance, there's purpose, there's membership. So there's a lot going on inside the worker co-op model. There also are ESOPs that are unionized. Cape Air out on Cape Cod. I'm very good friends with Dan Wolf, who's the CEO there, and he's was formerly a union organizer himself. And he's very happy to now be CEO of a company that is unionized. The pilots union is a very strong union, and he's a huge advocate of unions. And this is an employee-owned company. So there are other unionized ESOPs. The other thing I would point to is there are democratic ESOPs, that there are quite a few 100% employee-owned. ESOP, by the way, is an employee stock ownership plan. It's created in federal government. It's a retirement plan, and it allows shares to be given to employees. They don't pay for them. They're given to them as a retirement benefit, and they can cash them out when they retire. That's a key difference with worker co-ops, where workers actually have to buy their shares in the worker co-op. So what I started to say was there's some democratic ESOPs where employees elect the trustee and so forth. So there are a lot of ways to do the form. I like to say I'm a huge fan of employee ownership, and I think the model is whatever is best for that particular company.
That's great to hear the different. I wasn't actually aware that there were so many variations even within the sort of ESOP model. So that's very helpful. One of the things that I think is on everyone's mind and that came up in the recent election is this idea of wealth inequality, and it seems like the election of Trump, at least from my point of view, was heavily correlated with some of the continuing economic challenges in Appalachia and Rust Belt states like Michigan, Ohio, Pennsylvania. And I noticed that you did some work with the Ford Foundation on wealth creation in rural communities. Can you maybe speak a little bit to what you saw both in rural communities and the sort of challenges they face, and then how that potentially, do you see that correlated pretty heavily with the election of Trump?
I do. Yeah. I mean, it was rural areas that really turned the vote of the Electoral College. And it was rural areas that was the reason that Hillary Clinton lost, even though she won the popular vote. And so that, I think, was unexpected for a lot of people. Yes, I worked on a project for 5 years. It was called WealthWorks. And you can still look that up on the web. And it was funded by the Ford Foundation. There were a group of consultants and a number of pilot projects on the ground. I worked in the Deep South and Appalachia and made a number of visits there to these sites and helped people. I was helping them with raising capital. It was a lot of what my particular piece of this project was. But I learned a couple things. I mean, first of all, I learned that, it's really hard to get something going in rural areas when there's just almost nothing there. I mean, for example, we're doing some other work in rural areas now at the Democracy Collaborative. We have a learning action lab where we're working with Indian groups, Indian nonprofits that are trying to start social enterprises and employee-owned firms. And we went out, for example, to Pine Ridge Reservation in South Dakota, which is one of the very poorest regions in the country, if not the poorest. About 80% unemployment on Pine Ridge. And you go there, you have to drive 30 minutes from the nearest city, which is a very small city. And you drive through the Badlands, which are beautiful, but I tell you, there's nothing there except rock formations, beautiful, beautiful rock formations. And then you come to this reservation where there's just almost nothing going on there. I mean, there's one hotel, which we stayed at, and that hotel had one restaurant. And so we ate at that one restaurant the entire time. And there's just, I think you have to drive 20 minutes mostly to get fresh produce. So you can imagine trying to do economic development in that area is really hard. There's not a density of people. There's not a density of businesses to work with. And this is what this is like the worst of what many other rural areas face in a smaller way. And so what we do at Democracy Collaborative, we call community wealth building. It's very similar to the WealthWorks project. I think it's all really the same emerging paradigm. And that is that, first of all, you want to connect with where are the big buyers? Where's the big economic activity in the system? How do you connect to it? In a city, it's anchor institutions, it's nonprofit hospitals and universities that can localize their hiring and their purchasing and their investing. In rural areas, you need to build a value chain. The big buyers might be out in the nearby city, and so maybe you need a trucking firm to help you get your products from here to there, or maybe you need big contracts to bring that work in. On Pine Ridge, there's very little housing, and so they're doing a regenerative community. They're building housing. It's going to have solar power. It's going to recirculate all their own water. It's going to be very ecological. Then they want to start an employee-owned construction company, an Indian-owned company. So rather than let some white firm take all that work, they want to keep that work local by creating their own employee-owned company. So that's an example. You look for the big, where are the big dollars moving? How can we connect something to that's going to keep the wealth local? And that's a lot what we did also in Appalachia and the Deep South.
I think your colleague Sarah put us in touch with Tonkabar for our Force for Good B Corp fund that we started. So we're looking at investing in them.
Nice.
Yeah. One of the things I've been thinking about a lot with the election of Trump is that there's obviously the Russia issue or the FBI director, and I'm a little worried that progressives, we can get sort of, it seems like those issues are a little bit of a red herring, like that.
Mm-hmm.
Like the real wake up call for me was there's a huge problem that I don't think many
Mm-hmm.
progressives know about in the sort of
Mm-hmm.
white working class or just the Midwest Appalachia region and sort of economic inequality of our communities. So I'm wondering if there's
Right.
solutions that you found or that you could recommend folks who are maybe not living in one of those areas, or how can they help? How can folks help sort of address these
Mm-hmm.
sort of issues that you found without maybe moving to Ohio and living there or something? Is there
Sure.
other ways to?
Sure. Yeah. I think we have to include rural areas in our thinking. And I'll give you one example. Foundations tend not to work in rural areas. And those foundations that have worked there sometimes are abandoning them. So that's a key issue. You need philanthropic funding in these areas. A second issue, I think, it has to do with investors. In the impact investing space, there's been a lot of excitement about microfinance of sending money to Bangladesh and to India and so forth, where you can make very high returns, but also save them money from dealing with these usurious local lenders. Um, but it's easier to invest in South Africa than it is in Alabama, and that's a problem. You know, it's very hard to invest in Alabama. For example, you'll find very few CDFIs there, and a CDFI is a community development financial institution. It means local loan funds. It could be a community bank. It could be a venture capital fund. They're all certified by the federal government as CDFIs, that their focus is to help the community. There are very few of them. There's a ton of them in Vermont. There's a ton of them in Wisconsin. There's almost none in Alabama. One of the projects I helped was a woman who was looking at starting one in Alabama. I think as investors, we need to help build a pipeline of investment into these areas and to be deliberate about it. I tried to work with a number of enterprises on helping them find impact investing. And what I found was the problem was not that they lacked capital. The problem was that they lacked investment readiness, and that's a different thing. And that it takes, like you would have farmers, for example, growing purple-hulled peas, and there was huge demand from Walmart for these purple-hulled peas, but the farmers weren't certified. There are certain agricultural certifications that you need if you're going to sell to Walmart. They didn't have a truck in order to get the stuff to Walmart. They didn't even have an aggregation center. If you have lots of small farmers, you need to aggregate the food together before you have enough that Walmart is even interested. So all of that takes philanthropic funding to help these small farmers get ready to serve these large markets. And the same is true with finance, that maybe they didn't have. Maybe they were great at farming, but they didn't know what they spent on seeds last year, and they didn't really know what their revenue was, and they didn't have good books and so on. So these areas need help in order to be ready for investment and to help enterprises grow. So I think I'd love to see MBA students go there and help. I'd love to see foundations focus there. I think impact investors would have a role to play in these areas, but they would need to partner, I think, with philanthropy somehow. And so I think we need to not forget these areas, and we need to remember them. For example, I'm a huge fan of slow money. Slow money, as you know, and some of the listeners may know, this was started by Woody Tash, and it's all about, wouldn't it be great if we could all invest 100% of our of investments within 100 miles of our home. Well, what a lovely idea, and how lovely for us to be able to invest in the business next door instead of sending all our money to Wall Street, which is pretty much what we do now. But I live in Boston now, and if I invested all my money within 100 miles of Boston, I wouldn't touch Alabama or Mississippi, or some of these, Arkansas, some of these Appalachians and Deep South states. So we need to include them in our vision of what it is that we're trying to do as we build a new economy. And we need to partner with them. Another thing we can do is help these people get connected to our networks. I mean, one of the things I did was to help some young people get connected to BALI, which is Business Alliance for Local Living Economies. I helped them get connected to impact investors, and they're now doing some projects together. The ideas that so many of us thrive on. You're in the Bay Area, Ryan. I'm on the East Coast. I'm in the Boston area. There's a density of ideas and people here that is not there in these regions. And one of the things we can do is help to connect people. There are brilliant young people in these communities. And I think if you come across these people, grab onto them, mentor them, help them get connected into the networks that are making all this work possible. And they'll be the ones that can build locally what's needed.
Yeah, you said we need to not forget them, or otherwise they will remind us that they are there by electing people like Trump. So it was like a very big wake up call, I think.
Yeah, that's right. And Ryan, your work, my work, the work that we're involved in with the new economy, there are a lot of answers here for an inclusive economy. How do you have employees own their company? I mean, I was just at this meeting. Chroma Technologies is a high tech firm in rural Vermont. There are people there with a high school education who are earning $100,000, and that's because employees own that firm. It's not, it does. There isn't like one elite billionaire owning that firm. All the employees own that firm, and that's how much money there is to go around if we get our ownership structures right. These ideas work in rural areas. Areas have companies in them, but they don't have, it's hard to sell a company in a rural area. Rural areas are actually perfect for employee ownership. We've seen this in a number of cases. These ideas, we need to get them into the rural areas. I think where they're needed, because people are hungry for ideas and they're grabbing at the wrong ideas. They're grabbing at empty promises that Donald Trump is offering them. I think what the new economy has to offer is real workable solutions.
You mentioned Bali. For folks who don't know, Business Alliance for Local Living Economies is a fantastic resource around these what are the solutions that are working. And so just a shout out. I think that's a great resource for folks to look at.
Yes, that's right, Ryan. And Bali, Business Alliance for Local Living Economies, has a wonderful fellowship program. And if there are young people in rural areas, you don't have to be all that young, who are interested in new economy work and have a little bit of a toehold in it, you should become a Bali Fellow. It's a really great way to get connected to what's happening in this world. So I just think the world of those guys.
So perhaps besides worker ownership, what else are you most excited about right now?
I'm also really excited about anchor institution work, and this is something that we do a lot of at the Democracy Collaborative. While we want enterprises to be locally owned, locally rooted, broadly held, also, where's the fuel where are the big contracts that are going to help these kind of companies and any locally owned company really to succeed? Well, you look around. This happened in Cleveland. In Cleveland, it lost half its population in recent decades, and a lot of broken down, high unemployment neighborhoods, lots of people of color who can't find opportunity, and yet right in the middle of the city, right in the middle of these broken down neighborhoods, are these huge anchor institutions: Case Western Reserve University, University hospitals, the Cleveland Foundation. These beautiful, gorgeous, high-rise buildings right there in the center, spending literally $3 billion every year, and yet none of it was going to the broken down neighborhoods that entirely surrounded these anchors. Well, one thing about these anchors is they're not going to get up and leave, which a lot of businesses in Cleveland did. Case Western University is not going to move to some other state. So if you can get these anchors to begin localizing their purchasing and their hiring and their investing, that's a real tool for getting economic development going. And that was the insight behind the Evergreen cooperatives that we helped to design and launch in Cleveland. There's 3 worker-owned firms there their launch was supported in part by anchor contracts. For example, there is Evergreen Energy Solutions is an employee-owned company that it got its start installing large solar arrays on top of universities and hospitals. So anchor institutions, and we do a lot of work. We have a cohort we just did a meeting in December of 40 nonprofit hospital systems, and we're talking billions and billions and billions of dollars. 70% of the healthcare system is nonprofit hospitals. They have a social mission at their heart. They're not picking up and moving. And they're interested increasingly in localizing their purchasing and their hiring. And virtually every community has these kind of anchor institutions. How can we use them to begin localizing their procurement dollars and their hiring decisions? That's one of the things that we do a lot of work with. And on our website, you'll find we have toolkits for these institutions to help them figure out how to do these. How do they change their practices to localize these kind of decisions? So that's a big tool for these communities. So one of the things I want to say, Ryan, is that what we work on at the Democracy Collaborative is how do you build the power structure for a new economy? We don't want just little pilots or sweet little ideas here and there. What are the actual power structures? I mean, unions used to be the power structure for a progressive economy, and we know the unions have been decimated. So what are the power structures now? Well, employee-owned firms, commons ownership, anchor institutions, city government. There's a lot of progressive mayors. Republicans control state houses and the federal government at this point. Of the 30 largest cities, 27 or 28 of them have Democratic mayors. So there's a lot of interest in this work at the level of cities. Now, I do want to emphasize this work is also bipartisan. We work with the Republicans in Albuquerque, for example. So this work is embraced by all parties. But at the city level, there's a lot that can happen in rural areas as well.
I love the idea of strengthening the power structures that can be the backbone of the community, and especially I love the comment about Case Western is not going to leave Ohio, based on lower taxes in Indiana or something.
Exactly.
And do you find the institutions to be receptive to this idea of shifting their focus to be more local?
Increasingly, they are. So we are seeing growing interest. I mean, our work in this field is growing by leaps and bounds. So I would say yes, there's more and more interest in this. The cautionary note I would add is that some of that interest is driven by the Affordable Care Act, which has a number of provisions which encourage this kind of work. I mean, for example, one provision in it, or this is overall in healthcare reimbursement practices. There's the idea that instead of just paying for hospital visits and various services, instead you're paying for outcomes. So you want healthy people, and so that is starting to drive a change in hospital thinking and practice. And people are talking about things like the social determinants of health. Very little of your actual health determines on hospital care or medical care. Most of it comes from the fact, do you have a job? Do you live in a healthy community? Do you have access to healthy food? Those are the real determinants of your health. And so nonprofit hospitals are starting to turn their attention to how can they build the social determinants of health rather than just delivering, waiting until somebody shows up in the emergency room. Now, a lot of that movement, Ryan, I'm sorry to say, is potentially jeopardized if the Affordable Care Act is pulled out from under us. If that rug is pulled out from under us, this work will be slowed down. I don't think it will be stopped. Our reading of the field is that those hospitals that are already doing this work are going to continue it. They see the value of it. They understand that this is really important and sensible. It can save them money. Those who were considering it and were kind of on the fence, they may take a wait and see attitude, wait until the dust clears and they understand the policy environment. So it's, Trump's actions can be genuinely harmful in this area.
And do you see, for folks like many of us who are scratching and scrounging for the silver lining, do you take away, are there any optimistic things that you think came from this recent election that are sort of, wow, this is actually could be a good thing?
Mm-hmm. Yeah, I'm scratching for those too. I remain convinced at the deepest level that we will succeed in the long run. We're going to remain on this planet. We're not going to die out. We're going to build a functional economy at the planetary level. I mean, we have to. There's no other choice. And we know what that looks like. It doesn't look like the economy that we have today, which is built for maximum short-term financial extraction and hang the consequences. I mean, that's not gonna fly in the long run. So we know that the status quo is not going to stand in the long run. It's just not. It reminds me of the world of 1914. In 1914, or maybe 1910, if you push it back a few years, the world was dominated by monarchy and by aristocracy. And it had been since the very dawn of time in virtually every country, in China and Turkey, and not just Western powers, but this was a universal form of government, and it collapsed in about 10 years' time with the fall of in China and the Young Turks. I mean, there were revolutions all over, and then there was World War, and when the dust cleared after about 10 years, crowns were just rolling about the floor. So this institution that had endured since the dawn of time really fell apart in about 10 years' time. Now, it also took a world war, but over time, the world turned to democracy, and democracy is today the dominant governing form around the world. What we're seeing is that democracy is itself at risk. And the reason is that we democratized government, but we never democratized economics. Economics is still essentially an aristocratic form. The power, the wealth is in the hands of the few. We've never really built an economy that's designed to serve everyone. And that's our task now. So I think what we're seeing is the end game of the old structure. That's what's happening, and that's why it looks, frankly, so stupid. I mean, the monarchy looked really stupid at the end. I mean, you had Wilhelm out there in a ship signing treaties with different countries. That these treaties contradicted themselves. Contradicted each other. The reason, being born to a wealthy family is not a very good reason to become a ruler of a country. So, it became a very ignorant and dysfunctional form of government. The monarchy did. Well, we're seeing the same thing. I mean, having a bunch of billionaires who run everything to serve themselves and don't care about the fact that climate change is going to decimate the planet. That's not a very intelligent way to organize an economy or government. So it's not going to stand for the long run, but it could get very messy in the short run. And I am convinced that we will make the turn toward what we need. It's just a question of how much damage will there be in the meanwhile.
Yeah. And, I think the focus on economics is really the core. As sort of like a personal question I've been struggling with is, I've had socially responsible mutual funds for my retirement plan for many years. Mm-hmm. And then I was sort of looking, I just shifted them around again. And a lot of the socially responsible investments are in things like Samsung or Apple or Google, which is
sure.
It's like better than ExxonMobil. But investing in Apple or Google is based on a consumer society, even though it's socially. So maybe a question that you might not know the answer to is, what about folks who are invested in the stock market because that's the only thing you put your money in the stock market. That's like what you're supposed to do. Mm-hmm. And now there's sort of new investment opportunities locally, or do you see any sort of shift for folks who are interested in maybe even moving their money out of socially responsible investing on Wall Street and into more local companies? Is that sort of emergent yet? Anything that you've seen?
It's starting to emerge, and we need to do it. And we need to, because you're right. I mean, just moving your money around from one publicly traded company to another is not going to change the world. There are better companies and worse companies, and we should be invested in the better companies. And I do the same. My retirement funds are invested in these mutual funds and these companies. There's no way around it at this point. You don't need to flagellate yourself about that. But I think that we do need to always look for the alternatives, and that means supporting the creation of the alternatives. So it might mean talking to your investment advisor or your mutual fund people or wherever and say, I want some opportunities to invest locally. I really keep pushing that. And where possible, move your money yourself. I mean, you can invest in CDFIs, community development financial institutions. And there are local loan funds. For example, there is a Boston Community Capital right here in Boston is a great local loan fund. It's very sophisticated, has done some really great work. There's New England Cooperative Development Fund, another great fund. The Bay Area has funds, so seek these out, and you can move it's your fixed income investing. It's like a certificate of deposit. It doesn't have the federal backing, but it tends to be actually very low risk because they have loan loss reserves. They have very sophisticated lenders. They know how to manage lending so that investors do not lose. I mean, I talked to, as far as I can tell, CDFIs, they just do not see investor losses. It just, except for very unusual circumstances, is not going to happen. And sometimes you can get 1, 2, 3, even 4% returns in these kinds of fixed income funds. So I really recommend people do that. It isn't all that easy. It's not like clicking on the mouse and moving your money around. It's a little bit harder, but it's worth it. And there also are starting to be investment opportunities on the web. Now, many of them are only open to qualified investors, which are mostly high net worth people. But that is starting to change. So keep an eye on that. And, there are occasionally opportunities that come along to invest directly in companies in your region. And I encourage people to look at that too. You have to understand the risk, but this stuff is not easy. I mean, everything is built for it all to go to Wall Street. And so you have to look for these other opportunities and often help build them. But yeah, that's where our work has to go. We have to begin investing in locally and in responsible companies and opportunities.
Who do you look to for inspiration, whether it's organizations or books or thought leaders? Is there anyone that you're really looking at who's like you really think is leading this sort of creation of the new economy?
Well, there's tons of people who I respect and love in this space. But, I think, Ryan, the nature of new economy work is that there are a million hands of leadership. I think that's the nature of this work. There isn't a Martin Luther King of this work. It's too complex. It's too complex isn't the word that I want. It's too dispersed and immediate. It's like building houses. You can't have one person building all the houses. We're all doing the building with our hands, and so I think that's the nature of the work. I mean, I do have to say I have huge admiration for the two co-founders of the Democracy Collaborative, Gar Alperovitz and Ted Howard. They've been working away at this for decades, and our work is starting to get attention, and we've been growing by leaps and bounds, more than quadrupled our revenue in the last 5 years. So there's a lot of demand for our work, but that's because Gar and Ted labored long and hard with almost no support for many years. So I really hope people will look at Gar Alperovitz's work, and Ted Howard. His work is on the ground. It's in real communities, and that's the work of the Democracy Collaborative. So those are a couple of my heroes.
And what do you need right now? Are there things that our listeners can help support you with in your work?
Well, sure. We're always looking for collaborators when we're working in various communities. We're starting to do some work in Chicago. We're doing work in Albuquerque. We're always looking for supporters who want to join us as funders, and we try to point to investment opportunities so people can read our books and our reports. We have a new report out called "Financing the Inclusive Economy," which came out in the last few months. It looks at investing opportunities. We encourage people to look at those things and take up the word of community wealth building and take up a project in your own community. This is where the work is happening. Study our research and find out what other communities have done and look for models that will work in your community. That's what we'd love to see people do.
And what are the websites, just so folks can learn more about some of the work you're up to?
Yeah, take a look at democracycollaborative.org. That's the work of our organization. And we have a second website, which is community-wealth.org, which has a lot of just news of what's happening all around the country.
Next Economy Now is a production of Lift Economy. To listen to all of our episodes, go to lifteconomy.com/podcast. That's LIFT economy.com/podcast. You can also sign up for our monthly newsletter at lifteconomy.com/newsletter. Please also rate and review our podcast on iTunes, Spotify, Stitcher, or wherever you get your podcasts. Thanks for listening.